Welcome and thank you for joining us today on our 2020 Landscape in Focus series, FBAA eSummit here in New South Wales and ACT. Given that we cannot run our PD days in person right now, the FBAA is continuing to educate brokers digitally with these amazing eSummits. So, okay, let's get started. So first of all, one CPD hour is going to be allocated to each of you for each eSummit session here in New South Wales and ACT. So you'll receive an email with the CPD code and the survey following. So tune in throughout the whole webinar. I'd like to extend a huge thank you to all of our sponsors for their support, as without them, none of this would be possible. And you'll be hearing from each of these sponsors during the session, so please don't hesitate to get in contact with them, as they'll also be there to support you. You can download their contact details attached as a PDF in the handout tab of your control panel for GoToWebinar. Our sponsors are ALI, Bluestone, Pepper Money, Finstro, Prosper, Suncorp, Insurance AdvisorNet, Lend, AAMC Training, Strive Financial, Credit Fixed Solutions, and Trailbook Loans. FBAA members will also receive 10% off your membership every time you refer a new member who joins the FBAA. And download our FBAA app to easily access information on upcoming webinars, of which you can register for. The FBAA members also continue to access, there's a members area on the FBAA website. So you log in, receive resources and tools that will assist you in your role as a broker. The FBAA launched the broker support program available to anyone to access the website, with access via the website. Here you'll find many measures to assist you through the COVID-19 period and beyond. So jump on there if you need any issues. Today's agenda is attached as a PDF as discussed in the handout tab of your GoToWebinar control panel. To download, just follow the schedule for today's summit, and this is session 1. All right, please welcome the amazing Donnell Brooks, who is our first presenter today. Donnell is from Lend and presenting on alternate lending, COVID-19.
Thank you so much, Nick. And welcome to all of our New South Wales brokers and partners, and also let me get the webcam, there we go, we should be right now. So welcome to all our brokers and partners and all of our other sponsors. It's absolutely fabulous to finish up round 1 with New South Wales and ACT. So let's get started. Today I'm going to talk about alternate lending and alternate lending with the Lend platform. So why do businesses use the alternate lending commercial market? There's lots of reasons. Financials are not up to date, so obviously the most recent 2 years. We have ATO debt issues, speed of funding, flexibility of payments, and also term flexibility. We also find that multiple loan purpose, so whether it be equipment and cash flow and some expansion, for instance, that mainstream really struggle with that multiple loan purpose. And that really speaks to product combinations as well in running 3 or 4 different lines of funding. And as we all know, credit impairment. So one of the big things that I always talk about is the inconsistency with our credit reporting bureaus and the differences in scores and data captured. So you may have a director who has 1 or 2 utility defaults from 4 or 5 years ago, Is that really a reflection on the creditworthiness of his business? No, it's not. But is the business owner with a recent supplier unpaid default on there? Absolutely it is. And we are finding more and more that those two directors can actually sit in the same score band. So alternate lenders are much more open to looking at the story that sits behind the credit file. We're going to talk now about sort of the eight main products that we find in SME lending. So obviously equipment and asset has been huge, and lots of we saw with SLAs that the last 4 to 6 weeks have certainly been extremely busy in this space. So invoice debtor financing, so leveraging on your debtors ledger, trade finance, unsecured short-term lending, secured short-term lending. The private lending space has really taken a huge leap as a result of COVID, because as most of you would know, that the old cash flow lending rule has really gone out the window for a lot of businesses in Australia right now. So leveraging equity in your property is certainly a very popular choice for clients at the moment. The line of credit and overdraft facility, and obviously the merchant cash facility. How do we actually get into the alternate commercial lending market? Certainly at Lend, we've seen since March 16th that we are having a lot of resi brokers wanting to move into the commercial space. So the first tip is you already have self-employed clients on your books right now. So get an email out to them, get an SMS out to them, let them know that you now offer commercial finance and that you've got a range of products that you can offer your clients. First one is always your own database. Secondly is tap into other professional alliances. So accountants, lawyers, financial advisors, insurance brokers. Certainly, again, in our experience, a lot of these partners are actually coming to the Lend platform directly. So tap into your professional alliances that you already have. Get a dedicated landing page, super important, very, very cheap to design or have someone put into place for you, a dedicated landing page. That can cover the whole range of products. So you don't need to necessarily have 8 pages for 8 products, just get a business loan page up. And last but not least, social. So we've all been big over the last 3 months with, Zoom, GoToWebinars, LinkedIn, Facebook, a lot of lenders have even taken to Instagram. So let your social networks know that you now offer this service as well. 4 really quick, easy tips that are also really cost efficient, because we know that that is super important right now as well. So I just want to give you guys a quick industry and panel update. So there's 3 main ways to actually have a look at industries and how they're being funded at the moment. And certainly I'm sure, that our partners at Prosper and Finstro today, they will have a chat to you, may cover this off as well. But we really look at it 3 ways, and that is you've got your gold industries. So those that have continued to trade really strongly during lockdown, obviously we know supermarkets, food wholesalers, etc. So really have maintained a steady cash flow. That credit process for them is going to be the same as it's always been. Then you've got your silver industries. So they've certainly continued to trade in a limited capacity, with the expectation to obviously return to pre-COVID trading. So, whether it's been a cafe who's pivoted to takeaways, so have maintained at least 50% of their pre-revenue, they'll be in a silver industry and will be looked at just that little bit closer. And then the guys who are really going to go through quite a strong credit process, criteria process is the bronze industries. So they're the guys who have been fully impacted, so were shut down. They've returned to trading, but had nil income or less than 50% of their pre-COVID monthly revenue. So that's the best way to have a look at the industry of your client, and also the probability and the depth of the assessment process. So SME guarantee lenders that are currently approved and operating on the Lend platform, we're very excited to welcome Moola back to our platform as of today. So we have Get Capital, Prosper, Lumi and Moola, who are all offering the SME guarantee loans. And certainly, we've got a mix there. So You know, Ben and the guys, Ben will probably touch on this as well, but at Prosper, you know, they're running their products side by side. So the back to business product, which will apply the SME guarantee, versus say a partner like Get Capital, who are applying the SME guarantee to all of their deals across their three main product types. So be aware that the SME guarantee is not for everybody, and if your client can afford to start making payments today, then we certainly, you know, would recommend that you look at a normal product. So why the Lend platform? And we'll go through this fairly quickly. I know I've only got a couple of minutes left. So today the Lend platform is the fastest and most sophisticated platform for Australian finance brokers. It actually automates the process of matching a lender to a SME, and it uses a combination of AI and analytics. And it does all of this without blemishing the applicant's credit score. So it's intelligent enough to determine whether a customer can service the loan they want as well. It's an all-in-one platform. So it's a single application facility with one form, and I did that last week, sorry everyone. So basically you can submit an application, you can set preferences in the background. So if you normally would send your deals to a particular lender first, you can have them set up as your preference. But where the real value is when that lender cannot help you. What happens next? It's another portal, it's another application form, and away you go again. With the Lend platform, one application to access all the lenders, and we really encourage you to connect and speak to your BDMs at those lenders and continue to build relationships, but know that you've got technology to back you up. It instantly analyses the probability of obtaining the loan, gives you a best lender match, and presents the most suitable lenders as well. You can choose which lender to send the application to, or you can let the system do the heavy work. So you can be hands-on, hands-off, real-time status updates for all lenders, end-to-end deal flow, including notifications for complete control and transparency, and that's something that we really focus on at Lend. Serviceability calculators and CRM tools such as SMS, email marketing, tasks, etc. The process does not impact the client's credit file. And the big thing is we pay you your commission the same day your deal settles. So there's no waiting for weekly or monthly payments, you get paid upfront. The magic of Lend Score, so brokers gain free access to Lend Score, and it's an automated tool, and it's when we capture bank statements. So either you can provide your document ID in the application form, or we allow you to use the Illion process for free. So it has a look at over 120 data points, and the Lend Score will then give you the probability of the approval for your client. So we know that once a Lend Score reaches 60, there's an 85% chance of conversion. The magic of Lend Size is it provides you with a loan estimate, so you know already what your client is looking to get. Lend Size uses the automated statement analysis and the company profiling to accurately size the loan that your client can borrow from each of the matched lenders. So now we'll just have a quick look at the dashboard view. So you can see here, it's just a nice central dashboard view. You can view your leads by stage. This is where you can see all your settled deals. You can drill down here. You can get your commission RCTI invoices. This is what Lend Size looks like. So when it will promote the lenders that your client actually matches. And this can be done with or without bank statements. The bank statement piece obviously gives it the accuracy. Individual lead view, so you can see all the details on a quick dashboard and a quick snapshot. And on the far right hand side, you'll see some of the CRM tools where you can add notes, set tasks, SMS your client, and a serviceability calculator. Last but not least, we offer a lender profile section, which will not only let you know what your commission is that you'll be paid on the deal, but also when you drill in and view profile, it gives you some real insight into the lender's actual product. And soon to be added to this, so please watch this space for those that have been seeing it, and for those that gave up your time, thank you so much. But the Lend Education series will also be in here as well. So guys, that's it from the team at Lend. Thank you again to New South Wales and ACT and the FBAA. Much appreciated for the first round of live webinars. And back to you, Nick.
Yeah, thanks, Danelle. That's look, the Lend platform is quite an amazing platform. It's definitely worth checking out. We will now hear from AAMC and Pepper with an important message as to how they can assist you during this time.
Conducted by our experienced industry trainers to make learning interactive and enjoyable. These classes are not webinars, so you have the opportunity to ask questions and discuss topics with our trainers and other students. Sessions are available for those seeking to complete their finance broking qualification. We are also running complimentary 3-hour recognition of prior learning classes to assist existing bankers and brokers to gain their qualification more seamlessly. Take the opportunity to upgrade to your diploma starting today. Register your interest via the virtual classroom banner found on our website.
Hi, Aaron Milburn from Pepper Money, here to say a huge thank you to FBAA members. Throughout these really trying times over the last couple of months, we've partnered together to make sure your customers are supported throughout. FBAA members have been critical to the success and growth of Pepper Money across Australia, and I want to say thank you for that and wish you all the very best in 2020 and into 2021 together.
Okay, thanks to AAMC and Pepper for the message. And now I'd just like to introduce we have a lender panel coming up next. The next session, I'd like to welcome Peter White, who will be the MC for this panel session, and our finance sponsors, Ben from Prosper. We have, apologies, I've just lost the screen. We have Mark from Finstro, Cameron from Strive Financial, Surinder from Trailbook Loans, and Ebony from Bluestone.
Thanks, Nick, and welcome everyone to this little session where we're going to have a chat on what's happening with these guys in the marketplace. And so welcome Ben, Mark, Cameron, Surinder and Ebony. Thanks for joining us this morning. Let's get into it, and we'll get a bit of an understanding as to the world that was, is and will be as we come through these periods. Now, apologies everyone, I'm breaking in a new pair of glasses, so you'll probably see me move my head around because I can't freaking well see out of them. It's all well and good. I live with trifocals as an all pair of glasses, but when you change the prescriptions, it all gets a little bit shonky for a while. So I'm trying to make sure I can see everything. So bear with me. Anyhow, welcome. I'm going to use the order that I can see things on my screen, or kind of see things on my screen. And what I'd like to do is to get a quick 60-second snapshot of each of the people who are here with us so that you get to know them a little bit better. So ladies and gents, I want to get a little bit of a background on yourself. How long have you been in the finance game? What were you doing before you entered in the finance game? What do you do now? What's your company about? So with that, putting you all on the spot, so I've changed it a little bit. Cam, mate, give us the good oil.
Whitey, how are you, champion? Thank you for having us, and all you legends out there in New South Wales. I hope you're all staying safe and well. Whitey, small family-run company based up on the Gold Coast, Strive Financial. I'm sure I've seen all of you guys over the last few years. We're doing short-term business and investment lending, all secured. So whether it be first mortgage, second mortgage, PPSRs on cars or boats or equipment. So it's been a little bit quiet, Whitey. We've sort of bunkered down a little bit through this period, as we did through the GFC, but there seems to be some green shoots coming, and there's always opportunity for businesses through downtimes like this. So the deals that still make sense, we're still more than happy to write.
So Cam, give me a little bit more of a background on yourself. How long have you been in the finance game, and what were you doing before you got into finance?
With Strive Financial, Crown and Gleeson / AMF since 2006. So yeah, 14 years. Before that, mate, I was a cricket coach. I was highly involved at Queensland Cricket and was a full-time cricket coach / I played a fair bit of golf, and got to a stage in life where I got married and had a bub, and had to do something a little bit more serious.
So from cricket coach to lending expert, yeah?
I'm no expert, Whitey.
Well, remember, the definition of an expert is a drip under pressure.
Well, we're under pressure at the moment.
All right. Surinder, so if we're taking a shot at Cam, I might as well continue the theme. What were you doing before you became an Uber driver?
I can turn my mic off now. You've already got him.
I got nothing.
Give us a bit of your background, my friend.
There's too many people watching for a reply. Yeah, so I actually describe myself as the oldest young man in the industry. I'm 44 years old, and I've been doing this is now my 26th year. So I've done nothing but financial services since leaving school. Started off in the car industry as an F&I at 19 because I couldn't afford to stay at uni, so I had to find a job. Worked through that, went through the retail aggregation brokerage sides of things, then went through the wholesale side. Through the journey, I've recruited, trained and mentored 1,000 mortgage brokers in my lifespan, which is a bit scary. Then decided that it was time to give back a little bit, and came up with a novel concept to start helping the industry achieve what their goals are.
Excellent, excellent. And I guess if I'm taking a swing at others, I better take one at myself. So you're 44 years, I'm 45 years, and look what happens on the 45th year, mate. This is you forget the dark hair, it just goes grey like that, mate.
Pete, I'm 44 years old, not 45 years in the industry.
Yeah, I'm 42 years in the industry, but yeah, okay, right. Okay, so you got me. All right, Ben, you think it's funny? It's your turn, my friend. Ben, give us a bit of your background. It's great to get to know people. This is the important thing. So tell us your background, my friend.
Thanks, Peter. Hi, everybody. Hi, everyone in New South Wales and ACT. Ben Howe from Prosper here. A little bit of background. I mean, I've been in the industry just over 4 years now. So Prosper was actually my first finance gig, and safe to say I've learned a great deal in that time. But prior to that, I worked in a number of different industries. So funny enough, I actually started as a real estate agent and worked selling property lower North Shore for almost 10 years. Went over to London, sold some property over there as well for about a year, and came back and then dabbled a little bit into the real estate game again, but decided I wanted a bit of a change and wanted to get into the more business development side. So I've worked for a number of different types of companies. I worked in education, worked for SEEK for a while, which is great, Australian Institute of Management, and obviously Prosper. So I've had quite a substantial sales career in a number of different industries. And funny enough, I was also a nurse at one point as well. When I finished high school, I didn't get the marks at school, so I'm thinking to myself, well, I'll try and work my way up, become a doctor, and yeah, well, that didn't happen. I've gone to real estate instead. So completely different direction. But still helping people, still always with that mindset of wanting to be able to help people achieve their goals, and whatever that may be. So
very cool, man. Thanks, mate. Excellent, excellent. All right, Ebony, welcome from sunny downtown, locked up Victoria. How are you going down there?
I'm surprised I'm actually allowed on this call. Seeing as though
We've got special filters.
That's it. So look, things are a little bit tough down here, I guess, with whatever they're calling it, whether it's a second wave or a second surge or what it is. But hopefully we can get our act together and actually start being allowed into other states.
Well, this is one way to get you into another state. Give me the Ebony background. What were you doing before the mighty Bluestone gig?
Yeah, so the Ebony background isn't that exciting. So I've been in the industry, I'll be 38 this year. So ever since I left school at 18 after my VCE, I started working for La Trobe, and then my ex-husband at the time was in the Air Force, so he got posted over to South Australia. So unfortunately for me, I had to follow him. Opened up my own Wizard Home Loan. Opened up my own Wizard Home Loans franchise. So I was on the dark side for about sort of 5 or 6 years as a broker. Loved it. It was pre-GFC. I just put a bit of joke in there about being on the dark side, but it was pre-GFC, so it was completely different days to what obviously we're dealing with today. They were good. And then I basically moved back to Victoria and worked for GE Money for sort of about 8 years. And then I've been with Bluestone as a state manager for VicTaz and SA for the last 6 years, and loving it.
Excellent. So when were you with Wizard?
So Wizard was, I think, from 2000 to 2000, no, it would have been 2002 to 2007. Right before they sold. So they, as out, they sold and got rebranded to Aussie.
Yeah, I'd left a few years ago. I was Mark's first CEO, technically, as an employee at Wizard. That was around '98, yeah, so we progressed past that point. We'll leave that story for another day. Probably shouldn't have that now. Let's segue across. Thanks, Ed. Over to Mark. Your turn, my friend. Give us your story, the Mark background as to how you got to where you are today.
Yeah, thanks, Pete. And first panel, so be gentle. Having completed an archaeology degree in the UK, I was going through a few different opportunities and ended up working for Close Brothers. So primarily in invoice and trade finance over in the UK, and came over to Australia in 2002 and spent 9 years with Bank of Queensland up in Brizzy for most of that, before joining GE Capital and Allianz before that, Allianz who bought the ANZ Data Finance book, and then Allianz who sold into GE. So yeah, been at Finstro now since October last year, and enjoying it. It's been a challenging few months, obviously since sort of February, March, but yeah, enjoying it though.
I love these conversations. Yeah. What a great wealth of knowledge we have in this. We've got an archaeologist, we've got a doctor, we've got a cricket coach, and I'm a high school dropout, so power to us. I love talking to you people. It's so wonderful. Hey, we better get into some good oil stuff on what's going on in the marketplace before we run out of time, because that'll be on us before we know it. So what I'd like to do is, Mark, I'm going to stay with you. Can you give us a little bit of a snapshot of what's happened through this COVID period? Because the simple reality, and as Zorinda pointed out before, we're talking about GFCs and so on, when we go through these periods, it's not easy for anyone, and things happen, and they're not always fun, but there is a story as to what happened, to where we are today, and how we see the future is going to pan out. So can you just give us a little bit of a snapshot from Finstro's point of view as to what you went through, where you are now, and where you see things are going in the not too distant future? Yeah,
sure. Well, I think we were pretty early reacting late March. We've got 1,700 clients, and we wanted to speak to every one of them by phone. So we put a team in place to contact those clients. We set up a range of assistance packages that included payment holidays for either 3 or 6 months, depending on the industry and level of impact on our customers. So we worked through those, and I think quite pleasing was that probably just less than 20% of the book opted for the 6-month payment pause before we pick up again in September, October. We had a lot of clients that just continued on business as usual, but we offered them a smoothing package where we'd extend their term for 12 months and just lessen the monthly repayments. Certainly challenging. As one of the senior managers, I was tasked with looking after or speaking to a lot of the clients that were already in recovery before this happened. And I think one of the massive positives out of this is that we've certainly got a lot closer to our customers. I think when we come out of this, we'll have a better understanding of many of those. And we've also taken the time during this period to tweak some of the credit policies, but we're also going to be coming out with a tiered range of products in terms of pricing, deal quality, which I think is going to be quite exciting when we're ready to sort of push that button again.
Isn't it interesting, the amount of brokers generally I've spoken to around this subject, they've gone and reached out to their clients, and the responses have been phenomenal. And as you were just saying, you learn so much more about your clients, but also that relationship, which to me is king, just takes another level of being cemented in the right manner as to of what that journey looks like. So yeah, well done, well done. Ebony, over to you. How did Bluestone fare? You know, we all have these flows and challenges through life, and we get out the other end of them. But what was that little journey like for Bluestone?
It was definitely interesting times. We were, I guess, one of the first lenders to put a halt on things in March, and I guess everyone sort of assumed that we were going to be the same as what we were at GFC, and you were going to pull out of the market, which was definitely not the case. We're in a massive, strong position compared to what we were like with GFC, with Cerberus Capital Management acquiring us a few years ago. And for those that don't know who Cerberus Capital Management is, they're like billions of dollars private equity firm over in the States. So we were set up because we specialise in self-employed. I guess we really didn't know how much of the book was going to be affected by COVID. It's not like it's something that we've actually experienced before. So we just obviously wanted to protect ourselves and the customers, etc. And we went from 1 to 2 phone calls a day to 400. So we had about 20% of our book in hardship. We didn't automatically offer the 6 months payment pause. We wanted to make sure that we were touching base with all our customers on a monthly basis to make sure that we weren't going to put them into a worse off position, I guess, that if they only needed 2 months off, then that's fine. If they needed 3, that's fine. If they needed 6, great. But they only obviously got what they need, and therefore, you know, the interest wasn't going to get capitalised, etc. And I guess it gave us a sense of touching base with that customer on a monthly basis just to check in, make sure they're okay, see what their situation is like, because it's forever changing. We made some rate increases at the start of March, and also we had a lot of restrictions when it came to some industries. The great news for us is probably about 2 weeks ago, on the 15th of March, we decreased our rates a lot more than the 35 basis points that we put them up. Last week, we also just put them down again and realigned all our rates. So some of these rates went quite down considerably. And as of this week, you'll see an EDM go out that some of the restrictions from industry's point of view is going to go down. And next week, we can potentially obviously start taking rental income on new properties. So the good thing about us is we've got it basically set in on a weekly basis that we're all meeting up, or the exec teams are meeting up to sort of talk about the restrictions that we have in play to then start easing them. So you'll see that basically, you know, Bluestone's definitely back in business. We want to obviously write volume. We've got a special offer with no establishment fee at the moment on Prime Full Doc, and we obviously want to write loans.
Excellent. Excellent. And it's an interesting point you made about reflecting on the GFC and so on. And I think what everybody needs to understand is what we have been through as a country and as a lending sector is unlike anything else in the past. So whether it be the GFCs of this world or past recessions, this is different again. And so it brings a whole host of complexities with it that quite often at times you sort of go, well, crap, how am I going to deal with this? What's the best management process? How, if I step too far this way, I could put myself in a worse position long term. So yeah, all power to Bluestone and the moves they made. I know it probably wasn't easy, some of those decisions, but the important thing is to live and play another day, and certainly done that. That's excellent, excellent. So Ben, same sort of question to you, and what's happened with Prosper around that, you know, as things went into COVID, and then where we are now, and where you see things in the not too distant future.
Yeah, certainly. Thanks, Pete. Look, we were pretty fortunate enough to be a pretty nimble company. So I guess what I could probably do is sort of break it up in sort of 3 stages, I guess. So prior to COVID, I guess the good thing about being Prosper or FinTech, we're pretty agile in this sense, and we effectively had sort of flexible working hours to most of our staff. So we're sort of set up where a lot of people had the option of working from home 1 or 2 days a week. So in that sense, when things really did hit the fan, we were able to sort of have a sort of turnkey approach where we had a business continuity plan already in place. So when things really did hit the fan, we basically just turned the key and everyone started working from home within a very, very short amount of time. I think it was within 24 hours. I think everyone was working from home. And so we had basically little or no disruption. Actually, I'd be lying if we said we didn't have any, but very, very minimal amount of impact in that regard, which is really cool. And, when obviously the proverbial did hit the fan, the number of inquiries that we got for people wanting to know about hardship options and those sorts of things went through the roof. So to give you an example, normally on a monthly basis, we have about 500 calls to our collections team, for various reasons, whatever the case may be. On the day the main day it happened, we had about 1,000 calls before lunchtime. So, and the cool thing is one thing I think is quite cool about being part of Prosper is that everyone at that point basically moved into protect mode. We basically, everyone, even myself, was on a call for collections calls, talking to business owners about, the options that they have. And the thing is, we didn't really have a one-size-fits-all sort of approach. We'd have a meaningful discussion with each business owner and work out an option that's going to work for them, because not everybody wanted a deferral. So we could have deferrals or part payments or something like that. So we worked through that, which is great. And I think from about a week ago now, we didn't have one inquiry come through from a customer regarding that. So things have settled down. I don't know how the whole Victorian thing's going to work out, but that's another story. We probably won't go into that today. But from a lending perspective, look, we kept our products in market, so we were still lending through that phase as well. And SLAs were pretty much the same, which is great. Although obviously our risk appetite was temporarily adjusted, right? Like most others, but we did keep our products in market. And the other cool thing as well, while we were in lockdown, we got access to the SME government guarantee grant, which was awesome. And since actually getting access to that, within 2 weeks we created 2 brand new products called Back to Business Loan and Back to Business Line of Credit, and we had those in market within 2 weeks in a small controlled pilot program of about 30 brokers. About a week later, we sort of rolled it out to 300, and now we've rolled it out to mass market in the last week or so. So it's really started to ramp up. What's going to tell you? So, and from I suppose from a broker standpoint, look, we're doing a lot of education at the moment to sort of talk about that, and we're seeing a lot more inquiry come through, and a lot of customers wanting to have that the access to those sorts of funds. And the thing is, the question we get a lot at the moment is, what is the future going to look like? It's hard to say. Things obviously Victorian sort of sparking up now, and as I said, that may impact things moving forward. But we can look at historical trends and how we sort of come out of it. And the good thing about being Australians, we're pretty resilient and adaptable. So I think we'll be okay, but time will tell. So we're seeing activities really starting to ramp up, which is good to see.
Good, excellent stuff, excellent. Surinder, I might move across here, and may I say, my friend, you're very, very handsome sporting that facial hair. It's good to see. Mine's taken 3 months, not 3 hours. Over to you, Surinder. Give us the good oil on where you've come from and where you're at today.
All right, so just for you, Whitey and Cam, so when COVID hit, I had to do a really big zig from dropping people off, but the food business got really, really, really busy. So we had to go from Uber to Uber Eats, and that hasn't slowed down.
Well done.
Anyway, yeah, so we were a small business and pretty nimble. So, the whole lockdown, didn't really come as a big shock. Thankfully, I've got 122 square meters of office, so by the time I sent everybody home, I just kept working through in the office, which probably saved my marriage. I've been home for 4 months. My team are still talking to me. My children laugh at my jokes still, and my wife's still married to me. So that's a win. So we didn't really change lending policy. We got a little bit cautious on rent rolls for a period there, because obviously until the whole eviction moratorium and that has worked out, we're still a little bit gun shy on real estate agents, but we didn't change our lending to mortgage brokers and what we do. We didn't change our lending to financial planners and what we do. And probably the biggest change on rent roll lending was and it's still in place now, is that we can't approve a rent roll without getting board approval. Because again, unfortunately, it looks like there's a cliff coming September, October that's going to hit real estate fairly significantly in the rental market. So we're still cautious on rent roll loans, but you know, our inquiry levels, funnily enough, we're seeing the largest average loan size that we've ever seen. And a lot of the activity is around acquisition. So I think COVID's changed the mindset of a lot of broker businesses from being loan writers into being business people, which is a really, really good thing for the industry.
Okay, excellent. And apologies for that. My solicitor was just trying to ring me and I hung up on him. So I thought I'd better send him a quick message so he doesn't bill me for that. Mate, that's good to hear. I mean, it's always challenging times. And the one thing I love about you and your business, you've stuck by the brokers all the way through. And I think that's really fantastic of you. You do a great service in a very specialised market to virtually, well, anyone else in the game in supporting brokers and lending to them against their trial books. So hence the name. So excellent, excellent. Cam, over to you.
Hey mate, listen, small family-run company, so we're able to shut down obviously really quickly. And get back and work from home, and we haven't had an office or a corporate office for probably 4 years now. With the kids at the age that they're at, we've decided to do it from home, and it's been really, really successful for us for a number of years now. So it didn't really change that too much. I guess where it has changed drastically for us is we promise to be able to turn money around within 24 to 48 hours. And the reason we can do that is I get on a plane and I fly to meet your client, whether they're in Sydney or Adelaide or Perth or what have you. And clearly that can't happen at present or for the last sort of 3 or 4 months. So we've obviously done a lot less lending through that period. I think it all comes back to confidence. People need to have the confidence to borrow money, and we need to have the confidence to lend money. And I just think the uncertainty around it all affects everybody's confidence, whether you're business people or your lenders. It's no different. The confidence to actually make deals or lend money or borrow money has been affected greatly. And I guess we started to see some good signs over the last few weeks. The Victorian thing, I think, will again create the uncertainty around whether this thing's over. I don't think it can ever be over. New Zealand celebrated that it was gone out of the country until the next plane landed 2 days later and it was back. So I think it's here for a period of time. I don't think it's going anywhere. So it's going to be interesting to see how businesses and the borrowers actually deal with that uncertainty of what's going to happen. Can
I jump in there? Because I think you've made a really, really good point. We talk about, this coronavirus, it's sort of what's happening in New Zealand, what's happening in Victoria, and something that basically we've got to live with. And I think that's bang on. I think mentally and psychologically we've got to get there and understand that, my view is this is just a bit like another strain of the flu sort of thing. Every year you're going to go get a jab. And once they found a virus, a solution to it, I don't think it's ever going to go. I think it's a bit of a reset for a new norm. And God forbid overseas there's been one case only, but of the bubonic plague. God forbid something like that starts again. I think if we keep on top of this, it doesn't go away. It's a matter of how we deal with it and have confidence to deal with it. So it's a really important conversation with you guys as lenders, is that your confidence will feed everybody else's confidence as well, but you've still got to have the confidence to step forward. And I think it's a challenging play, and one that, and I think Surinder touched on before, that, you know, might be the latter part of this year before we sort of know where that the edge of that cliff really stands.
Yeah, I think health-wise, hopefully, touch wood, we're possibly through the worst of it, and we're going to have these hotspots come every now and then. Economically, I'm not sure that we've seen the worst of it yet. The government's obviously done a pretty good job at throwing money at it. When that money stops in September, because it can't go on forever, where that sort of leaves a lot of businesses. So specifically around our stuff, we're lending against the value of property. So at the end of the day, I think anyone that tells you they know what property is going to be worth in 6 months' time or 12 months' time are probably making it up, because we don't know whether Victoria is going to be in full lockdown in 2 weeks' time, or whether it's going to be in Sydney in a month's time. So what property is going to be worth? I think China's probably the bigger problem. If they stop their money coming here and they stop their investment in Australian property and what have you, there seems to be some problems there as well. So I guess ours is still just that uncertainty. We are lending if the deals make sense, but the deals have to stack up, and more than ever, they have to make sense on why the client wants the money and what their exit strategy is to be able to pay that money back.
Yeah. Okay. So on that point, and knowing time is starting to beat me, what's your sweet spot in lending at the moment? What sort of property, LVR, what sort of thing you go, yep, that's easy for us?
Yeah, listen, we won't do a lot of second mortgage stuff behind large first mortgages at the moment. We've never really liked lending behind more than $1 million of first mortgage debt. It's probably even lower than that now. First mortgage stuff we've done a lot of with clients that we've got good relationships. When you fly and meet with all of your clients, you actually get to spend a morning with them while they're signing the documents. You can form really strong relationships with people. So we've had the only lending we've done probably only a couple of new clients in the last few months, but we've done a lot of repeat borrowers that we've got relationships with and that we understand their business, they understand how we work. So we've done a lot of first mortgage stuff with developers that have got excess stock there for a period of time that need to get some cash out or what have you. But yeah, it's very, very difficult. Every deal is really individualized. Now, our deals have always been individually looked at. Even more so now, we really don't have a blanket view on deals or firsts or seconds or what have you. We'll look at everything individually and make a decision on that deal.
Yeah, so as you said before, if it makes sense, and you look at them on an individual assessment and can consider from there. Yeah. So Surinder, what about yourselves? What's your sweet spot at the moment? Hopefully it's still looking after mortgage brokers. Is there that and other things, or no?
Mortgage brokers and financial planners are this absolute sweet spot. We're more confident than ever in trail income. COVID's actually shown, because I've got to do it, Pete, and you know it, how inept Commissioner Hayne was in his findings around mortgage brokers. COVID's really shown that brokers get paid trail, and best interest duty, jeepers, if through March to June, every mortgage broker in Australia didn't show best interest duty when they weren't forced to, just helping their clients and not getting paid for it, I don't know what shows the decency and the great work this industry does. So we're more bullish on mortgage brokers than ever.
And that comment came up last week in the House of Reps inquiry that they're doing at the moment, where the chair's opening remarks to the broking sector was that Haynes got it wrong. Very much a very appropriate spot to land, and he's unquestionably correct. Over and above and beyond. All right, mate, that's excellent. So, and one thing I think you've got a question mark around, or has that changed on rent rolls? I missed the point on that before earlier.
Yes, still happy to do rent rolls, Pete. So just think about the old days for us that have been in lending for a long time. You used to have open policy. and if it fit, it just went through. And then if it needed LMI, it got the magnifying glass on it, and it got looked at a little bit harder. So we're basically treating rent rolls under a mortgage insurance policy, for want of a better description at the moment. We're just looking a little bit harder, making sure that it makes a little bit more sense.
Yeah. Okay. Excellent. Ben, what about yourselves? What's the sweet spot at the moment for Prosper?
Look, we're pretty much open to lending to any small business that's not on our excluded industry list pre-COVID. So because we have both products, our core products as well as our back to business products, it's sort of allowing us to lend to a lot of different businesses. But certainly our sweet spots, essential businesses, you know, medical, health businesses, your professional services. I mean, look, there's, again, we can pretty much lend to most, because essentially what we're doing is we're looking at income pre-COVID and post-COVID. So we're looking at, you know, how we'll see businesses perform pre-COVID, but also how they're bouncing back. So, and it's changing on a daily basis. So it's, I think, a really good thing about our Prosper technology is that we're it's adaptable in that sense that we can adjust it to certain suburbs even. So we can lend to most, but certainly those that have fared pretty well during the COVID period. But again, those businesses that are back running, even your cafes, your restaurants, even those sorts of businesses we're lending to as well. So appetite's increasing.
Nice, nice. Ebony, what about in Bluestone? What's the sweet spot looking like at the moment for you guys?
Yep, so our sweet spot, I guess, is a little bit different because we're catering for a broad spectrum of customers, so from prime, near prime, specialist plus. I guess coming up to where we are in July, you know, lots of refinances, especially like, I guess, owner occupied, where they might have paid or lived off a couple of credit cards or took out personal loans, etc. During the COVID period where they didn't, you know, things were a little bit uncertain. So a lot of debt consolidation, cash out to help them get back on track. And I guess especially coming up to tax time, paying out tax debts, etc. Just to consolidate it, and business loans, consolidate them all into like the one loan to, you know, reduce their overall monthly commitment is what we're looking at. I have to say, but I think it's really important in today's day and age to really speak to the BDM and run through the scenarios, because what we did a week ago is completely different than what we do now. We're starting to obviously loosen up our restrictions in what we do, and I think we don't want to lead anyone down the garden path if we're not going to do that deal. So I think a quick no is better than a prolonged maybe. Just speak to your BDM. To workshop the deal with you, will tell you whether it's a deal for us or whether it's not.
Yeah, excellent and good advice there too. Quick no is a good one rather than a prolonged question mark. That's great. And Mark in Finstro, now I know you guys have got a broad range of products, but there's something that sort of say, look, this is something us every day of the week at the moment.
Yeah,
that's sweet spot.
So very, very similar to Cameron, is very much an internal focus on the existing clients, and because most of our products tap into the trade cycle. We've continued to fund, you know, new supplier invoices, debtor invoices, based on existing performance and those that have continued to trade or thrive. New business, fair to say, it has been reduced, but that's more a tightening of our credit. So instead of a 6 month ABN, we're looking at 12 months ABNs. I've looked at a couple of over 100,000 facilities. So they've typically been in construction where projects perhaps during the period have been delayed, they're coming back online. But the only thing we've sort of changed massively is our cash advance product. So we've pulled that back because if a business is trading and we can tap into that trade cycle, then that's where we've been able to sort of continue, you know, as previous. But we're very much a focus on each individual transaction. So we've had Ando, myself, sort of helping the credit guys, looking at every single, you know, invoice funding that we've been asked to do. So, but like I say, we are going to come out with a tiered range of products, quality and pricing, but that's we were still working through the credit criteria for those. So more to come on that.
Okay, excellent. We better start and wrap up. So Mark, I'll stick with you. 15-second, any parting words besides telling me to get nicked? But
No, thanks for the opportunity. I enjoyed being on the panel for the first time. So yeah, I'll be looking after sort of north of the country and New South Wales with Ando. So thanks Peter, and yeah, thanks everyone else.
That's okay. Eb, any parting words?
Thanks again for having us. It's been great going around the country. I'm going to miss you guys, not seeing your faces going forward. But yeah, like I said, got scenario, give us a buzz, and we're here to help and do more loans for your customers.
I'm sure we'll see you again soon. I promise. We'll get a hammer, a big sledgehammer, and knock down that wall that's being built.
Okay.
Get more south of the border. No, can't do that. Ben, any final comments that you want to make? Anything that you want to message you want to get across?
Look, just a big thank you, mate, for having us on panel. It's great, obviously, to talk through the challenges and the things moving forward. But biggest piece of advice, just guys, if you guys have a scenario regarding a small business, contact your BDM, talk through the scenario. At Prosper, as I said, we've got 4 products in market now, and we're really seeing a lot of inquiry come through. And now more than ever, we're really helping brokers and their customers get the funds that they need. So guys, just reach out to BDM, reach out to me, reach out to the other teams, and talk through what you've got. It's better to say, as Pete said, quick no than a long-winded maybe. So definitely contact us, and we'll do what we can.
Excellent. Thanks, Ben. And Surinder, the man with who's constantly full of words of wisdom. Any parting words from yourself, my friend?
Yeah, will the Broncos actually win a game this year?
No.
Can I get on that?
Move on.
Now's not the time, mate. No, no parting words. We're just still here supporting, pushing everything that we can and having fun. Good.
They're good parting words. What about you, Cam?
No, Waddy, just thanks, mate. And as the other guys have said, with lenders like us in the business space, if you call with scenarios, we're always happy to talk through them, and might only take 5 minutes, and we can either point you in the right direction or let you know whether we can or can't do it. And you'll never get long-winded 3 or 4 days to work out whether it can be done or not. So if you do have scenarios, please feel free to contact, and we'd love to have a chat.
All right. Okay. Well, that's a wrap for us. Look, thank you, everybody. Appreciate your time. Stay well, and we'll look forward to seeing you in a real world again, not too far away. But in the meantime, thanks very much, and I'm sure people will be in contact with you very soon. And from me, it's time for me to hand back to Nick, and I'll catch up on a few emails. Thanks, guys. So, Nick, thank you, and back over to you, my friend.
Thanks, Peter. That's wonderful panel, insightful as always. All right, everyone. Now we will be hearing from Insurance AdvisorNet Australia and On Deck with an important message as to how they can assist us during this time.
Hello everyone, this is Darren Lodes from Insurance AdvisorNet. Just touching base with you all. I hope you're all keeping well through these crazy times that we're all going through. Just a quick grab, the one bit of advice I'd give you in the time that I've got is for those that have got their policies due this month, and I know there's quite a lot of you, maybe this year's the year to take advantage of our premium funding option where you can space the payments out over 10 months rather than an upfront payment, just to help you cash flow through these times. Any other problems at all, you guys know where to get us, and we're here to help you where we can. Stay well, and we'll get through this together. Cheers.
Business owners. They're anti-corporate, pro-go for it, never stand still people. They're the always on, the ever enterprising, taking on every challenge, but they're not on their own. At On Deck, we help fuel their ideas with a whole new way of lending that focuses only on your business. We say no to judgment, yes to facts, no to slow, because we're for fast. When the little things matter, we see the big picture, so you never miss an opportunity. Whatever your business, now you can get on with it. On Deck, the small business loan specialist.
All right. If anyone has any information that they require, further information, contact IIA and On Deck Direct. So I would just like to please welcome our next speaker, Renee Blethlen from Suncorp, our national wellness sponsor, who is presenting on 5 ways to build resilience in times of change. So over to you, Renee.
Thanks very much, Nick, and thanks everyone for joining the session today. I know we are running a little bit over time, but I would strongly encourage you to stay tuned for the information that we're going to share with you. It's a short presentation, but I think what we're going to talk about is really important. And if you listen to the panel just now, you might be feeling a little bit uncertain and you might be feeling a bit unsure about what's ahead, and that makes the information that we've got for you even more important for you to have a listen to, if not for yourself, for the customers that you're serving and for your friends and family and for those that are working with you. So I'd like to thank the FBAA for allowing us to be the wellness sponsor. This is a really important piece for us as an organisation, and we're not a wellness expert. The information that I'm sharing with you today is actually information that's provided by our employee assistance program partner, Assure. And as part of today's presentation, there'll be some tips that we'll be sharing with you, and also some information that we can email to you if you are interested in learning more. So what I want to cover off is we're going to be talking about resiliency and why that's important. But the first bit I'd like to cover just quickly is why is this important for us to be talking about with you, and what does the state of Australia look like? So last year we participated in the Are You OK events, and we talked about vulnerable customers, and for where Australia has moved into and the world in the last few months, there were people prior to that situation through COVID and through impacts to their income and changes to their family household circumstances, whether it's homeschooling or whatever. There were people on the brink of being financially vulnerable before that happened. So before that, what we knew was that 30% of adults in Australia don't have savings. 45% of people will experience a diagnosable mental illness in their lifetime. 25% of people experience anxiety in dealing with financial services, and 25% of people can't or sometimes just don't pay their bills. And that was pre-COVID. So what does that do? All of those factors create stress, and they create anxiety, and they make someone feel vulnerable at a state in time. It's not actually a character trait, it's a state in time, and that's how we actually view the vulnerable customer piece. And whether it's you yourself that have experienced a change to your business which may have caused stress to you personally, I'm 100% certain that you are servicing customers who need your help. And it's not just the relief packages, but it's how do you emotionally support them because of what they're feeling, because of the vulnerability that they're experiencing due to the financial hardship. So the good news is that there's a way to help you handle stress, and it's about resiliency. So I just want to give you some context to what resiliency is. So resiliency is the ability to positively respond to adversity. It's the process of adapting well in the face of adversity, trauma, tragedy, threats, or even significant sources of stress. It helps us bounce back from setbacks, and it's well researched that our experiences in our environment have the potential to shape the neural pathways in the brain, and our brain has an amazing capacity to change and adapt. This is referred to as neuroplasticity. One of the most important needs of the developing brain is safety. And when we feel safe and secure in our environment, we can think clearly and we can problem solve effectively. If we feel unsafe in our environment, our brain is likely to detect potential threats and prepare us for a fight or flight response, which I'm sure you've heard about. When we're faced with prolonged periods of stress, the brain may adapt to the unsafe environment by responding to situations with fear-based emotions. And this means that the amygdala rules and it incites a stress response with increased levels of adrenaline and cortisol running through the body, and the result could be an overly anxious brain. Our brain responds to everyday stresses which are normally traffic, work demands, deadlines, conflicts at work, as well as pressures at home. I think that we all, it's very obvious that we're all experiencing stress because of the last few months that we've been through and the uncertainty that's in the state of play at the moment with what's happening in Victoria, and the panel talked about this extensively. So the good thing is it's not all bad news. So the brain can adapt, and with knowledge, self-awareness and practice, we can actually train the brain to calm the amygdala down and override the stress response. So that's what today's about. It's about giving you an understanding of what that looks like, so that if it's not you that's experiencing it, there might be someone in your household, or it could be a customer. So hopefully there's some information here that might be useful. The other benefits to investing in resiliency is it increases your overall well-being and psychological health. We've talked about the reduced impact to stress, and it can improve the performance and increase your job satisfaction. And the most important thing is around clarity of thinking. It enables you to think clearly in a difficult situation. So what this slide talks to is research that the Assure organisation have completed show that people are resilient. They demonstrate a holistic set of skills across 6 domains, and that's what this slide represents. So those domains are vision, composure, reason, health, tenacity, and collaboration. So to explain that a little bit more, vision is having a sense of purpose and the ability to set goals and prioritise the right actions in the face of adversity. So it's being able to know what it is that you need to do to tackle in this immediate environment. So being clear and identifying your personal values, setting goals that are aligned to these values is a great way to develop in this area. Composure. Composure is the ability to regulate our emotions and stay calm and in control during difficult or stressful situations. One of the ways that you can build skills to better regulate your emotions and build awareness of your thoughts is through everyday mindfulness activities, and we've got one that we're going to show you. Reasoning. So reasoning is the ability to solve problems, think critically, identify opportunities, and instigate change. What we encourage you to do is familiarise yourself with unhelpful thinking traps. So those are things like catastrophic thinking and thinking in black and white and using blaming language. So what we encourage you to do is practice challenging your thoughts. Is there another way that you can think about the situation? Keep in mind that your brain can only answer one question at one time, and it will focus on the question that you give it. And whether or not you know that you know this situation is this, it's a great exercise to actually just challenge yourself with looking at it from the other side, and that you never know, that might actually come up with a different perspective and a different answer and a better way to manage something difficult. Health. I don't think I need to talk too much about health. Everyone's pretty aware, based on all the information that I've certainly seen through this period of time, that nutrition, sleep and exercise are the top 3 things to make sure that you're keeping on track with and keeping in balance, especially in this intense work from home type environment. You can often find yourself sitting for hours on end. So one of the tips we have is set an alert for your phone. Every hour, just get up for 5 minutes, walk around, have a glass of water, because what that does is it rehydrates your body. Not only is it good for your joints, but it's also good for your brain and your thinking. Tenacity. Tenacity is the ability to persevere through challenge and quickly get back on track. So a way to tackle this is to revisit your values and goals, and to assist you in being more tenacious and maintaining your motivation, schedule time to regularly identify, celebrate meaningful progress against your goals. And in this uncertain environment, it might be that instead of setting a 6-month plan, you might look at a 30-day plan because everything's so uncertain. So change your perspective. And collaboration. So today's an example of collaboration. Deciding to join us here today and hear from your industry colleagues. All of us are here to try and support the industry and support you in business, and connecting is a really important part of building resiliency. So based on that framework, what is something we can leave with you today, which is just some ideas on 5 ways that you can build your resiliency during times of change. First one is know what's in your control and what's not. Adopt a growth mindset. Find work that focuses on your strengths, and understand that most mortgage brokers are really passionate about what they do. So you've already nailed that part, but what can you do within your day that actually focuses on your strengths rather than getting stuck in some of the tasks that might not actually be making you feel very good about who you are and what you're doing. Practice mindfulness, we've got a tip sheet for you and one practice that we're going to run through with you, and taking time out to reflect. So mindfulness is all about getting into the moment and being present and being aware of what is happening right now. So this technique is something that you can actually do today. It's called STOP, and it's an acronym, and it stands for S is for stop, T is for take a breath, O is for observe, and P is proceed. So what do? You stop what you're doing and pause momentarily. And when the idea is to do this when you feel yourself perhaps being a bit stressed or unsure or feeling a bit anxious about something. Take a breath, reconnect with your breath. And the reason that this is important is that the breath is an anchor to the present moment. And one way to immediately calm your nervous system is to have your out breath be 2 counts longer than your in breath. Observe, notice what's happening inside you and outside of you. Where's your mind gone? What do you feel? What are you doing? Just take note of it. And then P is proceed. Continue doing what you're doing, or don't. Use the information that you gain during this check-in to change course. What we encourage you to do here is just do it mindfully, do it consciously, and do it discerningly. So if you're interested in learning more information, as I said, we are not a wellness expert, we're a financial services institution, but we're very passionate about supporting what we know customers need and what we know you need to service yourself and your customers. So these are just some tips that we've found that are all free resources readily available that might help you or appeal to you, and you'll find what resonates with you. So we've got a list of podcasts, some health and wellbeing apps that have mindfulness activities in them, and there's some TED Talks, which I would highly recommend if you are interested in learning a little bit more. As we finish up today, I just wanted to say thank you to all of you who have serviced all of the customers in Australia with what they've needed to get through this period of time, and a special thank you for when you've serviced a Suncorp customer. We have relief packages across all of our brands, which include our insurance brands. And when it comes to lending, we have a number of different packages that are available. So please reach out to your BDM if you need any help or support. We've got information on our website for customers, and we've also got information on our broker portal. I did just want to share this snapshot with you, which is what we've actually provided to the Australian community since COVID hit. And this is to do with support packages across home loan deferral payments, either insurance premium waivers or inquiries and requests for help. I do want to leave you with a positive note in that we are doing a 3-month check-in with those 15,000 customers who have needed us to defer their home loans, and 40% of the customers that we are talking to don't need any further assistance at the moment. Now, I know there's uncertainty with what's going on in Victoria, but I just wanted to let you know that we are seeing some really positive signs that people are getting and are able to manage their finances and get themselves back on track. And that's really important for us to share with you so that you feel positive about the role that you play and the opportunity that there is for you to provide lending to those customers who need it at the moment. And we are absolutely open for business and ready to support and serve where we can. So I hope that today's information was helpful. If there's something there for you, yourself personally, but perhaps for someone within your team, within your business, or for a customer or your family, we do have the tip sheet. And once again, this has been a great series. Thank you to all the other lenders who've partnered and made time. Thank you for making time to join us today, and I'll hand back to Nick.
Thanks, Renee. And look, I can attest to all of that stuff that you're talking about. It's very powerful, and highly recommend everyone to jump on and learn a little bit more about how to be mindful and yeah, makes a big difference. Thank you.
Awesome. Thank you.
Okay, so now we're going to hear from Credit Fix Solutions and ALI Group. who have an important message and how they can assist you during this time.
Hi, and lovely to be here to introduce Credit Fix Solutions and Credit Fix Lawyers. If you have clients who are currently suffering from financial hardship or maybe need to apply for deferral of loans, please feel free to contact our team and our BDMs will be there to present to you today. Our email address is info@creditfixsolutions.com.au and our national scenarios helpline is 1300 436569. Take care and stay safe.
As a broker, it's fantastic to partner with ALI. The product offering is incredibly simple. We can set up the policy online in a matter of minutes. Having a mortgage protection insurance policy is one of the most important things that someone can do.
We want to cover as many people as possible. We want to help them with their claims when they come up.
It's really nice to be able to combine making a difference and going to work.
Overall, I'd like to think that we do bring that additional dimension of care to the industry.
Just to thank ALI from the bottom of our hearts for just making it so much easier to just relax and get on with the process of recovery.
Thanks. So look, before we close off the very first eSummit for New South Wales and ACT, we have, I would just like to firstly, once again, thank all of our national sponsors for their time and support, and for everyone to please download their contact details in the PDF handout tab. Get in contact with them should you have any queries and questions. We personally use all of these sponsors through our in our business, and they're highly recommended. Secondly, you'll all be receiving an email with the code for the 1 CPD hour and a short survey. If you could all please put your feedback in there, we can ensure we can target your needs and get this eSummit platform really finely honed. Thirdly, there is a session 2 tomorrow from 2 p.m. till 3 p.m. Sydney time. So if you haven't registered for that, please do so on the FBAA website. And there are other webinar recordings on our FBAA YouTube channel that you can watch and grab CPD hours or register for other upcoming webinars via the FBAA website. So tune in for that too. Anyway, that concludes today's session, and I'd just like to wish you all a wonderful day and have a great day. Thank you very much.